Good evening to everybody and happy 4th of July. I know I'm starting a little bit early tonight. I totally forgot that this is a holiday weekend because I just work all the time. But for the good of the group, I'm going to go ahead and get started. And like I said, you can go catch us on YouTube for anything that you missed. So before we get started, I gotta just always say an investment, it has risk. So there's always risk associated with investing in stocks, bonds, exchange, traded funds, mutual funds, and money market funds involve risk of loss. Loss of principal is possible. Some high risk investments may use leverage, which will insinuate gains and losses. Foreign investing involves special risks, including greater volatility and political, economic, and currency risk, and differences in accounting methods. A platform's past investment performance is not a guarantee or a predictor of future investment performance. I don't know why I always read that. I just need to just blow it up and just let everybody just have at it themselves. But I just want to say that invest at your own risk. Sometimes you win, sometimes you lose, but it's just the journey that makes the most difference. So, like always, I'm Michael Smith, and I am the co-founder and CEO of Fsw Llc, Francis Smith and White. And our pillars of this organization is family, fitness, and finance. And I have my entire family here, almost my mother, my aunt, my cousins, kids, and it's a house full. And I'm just so thankful that I was able to share this time with them, as well as give you guys some heat for this upcoming trading week. So let's get started. The Dow closed at 152 points, the Nasdaq at 116, the S&P 500 at 32. Overall, not a bad week. I said we had some nice stuff that hit for us, and we had some things that didn't do so well. So let's look at the heat map. Look at the heat map. Like I told everybody, you should have the following in your portfolio: Microsoft or Apple. You gotta own one of the two. Okay, you want to have a good communication service stock, Disney, AT&T, Verizon, Google, Facebook, something. Just make sure you have one from each sector. I don't really trade consumer cyclicals, but I do swing trade Amazon, Tesla, Nike. Okay, and then I added Ford to the mix. But now remember, if I can find a good swing trade in any of my weekly quick watch list or the regular watch list, I would do it just to make my $200 a week. Financials, we can talk about financials in a little bit. Want to get a good healthcare. I prefer Pfizer as a little old dinosaur, but you don't have to worry about it. It's losing you a lot of money. And then there's Merck, Johnson & Johnson, a few others. If you're going to get into energy, I love Chevron. Chevron is probably the only one that I buy. Was the only one that I really buy and invest in, Chevron. And then I like the ETF VDE. Consumer defensive, I love Pepsi. I just added some Walmart this week, Pepsi, Walmart. But this is for more of your conservative investors because you don't have to worry about you losing a whole lot of money, but you get a nice dividend as you build and grow your shares. So just take that into consideration. Okay, so let's get right to today's topic. So I want to always focus on this quick watch list here. Now, if you don't have it, we don't have your email on file. If whoever is watching this video, you can actually just go to our website, fsw.llc.com, and you can find this quick watch list. Now, we produce this quick watch list for the intent for the viewer and the user to make $200 a week on this watch list. Now, just doing the bare bone minimum, you should make $200 off this watch list or more, depending on how much your initial investment is come when the beginning of the market open. So let's take a look at what we did this week. The first one, if you was on the call last week, we talked about how Nike did perform well for us, and we was going to look at Bed Bath & Beyond this time around. So let's see what Bed Bath & Beyond did this week for us. So if you was in Bed Bath & Beyond, we knew that it was going to do its earnings report on June the 30th. And when it did that on June 30th, this what happened. So you see here on June 30th, it got all the way up to almost $39.30. So if you bought that call option or you bought some shares on Monday, you bought it at about, $29-30. You was able to make $9 a share. And voila, that's how I made my $200 for the week. Now, a few other clients made a little bit more, but if you just had, say if you wanted to invest a few $100s, we're trying to find you some good position that you can get in and get out with little risk. But this was one just like Nike was the week prior to this one, that it had an earnings report. It did its thing, then it set back down. Now, if you just bought it and you just sat on it and you didn't cash it out, you still can hold it, buying it. I would like to buy it under 30 if you can. I like to buy it in the $28, $29 range, but under 30 or right at 30, it's not bad. And then you hold it for the next 30, 45 days, and it should pick up there some steam there. The next one on the quick watch list that I like to talk about is staff. We told you our stock that we like was APEI, RSL, staff, and WPG. And I'd say, remember, when you see the notes, that's what you should, really look to grab. And staff was the one that we really looked at. And like, if some people are coming in, just know we started a little bit early because I thought that I didn't realize that it was a holiday weekend, so we just started a little bit early. So some of the things that you missed, just jump back on our YouTube channel, and we'll push the link out and let y'all know when it's up. Okay. So the next one up was staff. So staff actually did a reverse split this week. So you see here, staff did a reverse split earlier this week. So if you own any shares, I want to say it was a 1-to-6, 6-to-1. Let's go back and see. Yeah, one post split share for every 6 pre-split shares. So yeah, so pretty much if you bought that one, you woke up and you thought that it jumped from less than 1,005, but it actually did a reverse split. Now, look, you could have sold and took your return if you wanted to when it got up to $6.61. But if you look at the RSI on this, it just hit 70 right there. And so there has been some movement on the MACD. So it may continue to continue to rise. And remember, this is a staffing and employment service company, and the job report came out. Jobs are coming back, but still people are just not going back to work. So this thing may continue to pick up pace as people start back to filter into the workplace, and people are trying to figure out who to hire. Right quick, I want to toss in this one. This is one that we're looking at now. It's actually called Job. It's similar to staff and employment services. You see, it's got a little movement here. It's not as much movement in the RSI that you saw in staff, but this may be one that you want to get in, like you had staff. You can buy, put $100, $200 on that, and you can get a good turnaround this summer. So keep that in mind. You will see this one on the watch list that's coming up. I went ahead and purchased it, some shares today. Okay, but I just want to show you how different ones move. So before we saw staff, when we saw staff had a little, it gapped up after the reverse split, then it remained high. So if you would take the chance on JOB, it may do some of the same thing. So just keep that in mind. The next one that was on the watch list, and I hope that you guys grab this one, pivot support, level buy and hold, CTXX. So that's what I'm buying now. I started on Monday, picking up some shares, CTXX, and the Citrix. Let's look at it's a technology software application. And you go down, it's named one of the best companies for multicultural women. And you can go ahead and read a little bit more about the company. So let's see here. So let's see what the chart is telling us about this company in the short term. So what you see here, this is a channel pattern. So let's look at on the daily chart. So let's look at the daily chart on this. Okay, there we go. So you see on the daily chart, CTXX, it's been pretty much sticking between about 112 and 145 here. So if you look at from this perspective, you're buying it at pivot support. So it came in early this week. I think it was around about 116, 117, and you still have room to get in on this one if you haven't. Let's look at the RSI. It is moving up, but it's right there, sitting at about 53. You see on the MACD, the MACD line is over the 9 line, so and with a little bit of space, so it is moving in the right direction. So this is one that it's a little pricey, but it does give you a dividend, so that's not bad. So just know if you carry in this one, you as you building shares and holding, you are making a little money, and that's CTXX. Now, if this thing can get hot, I mean, that's almost, $30, $30 a share that you can make. The analyst has this back in April, 150 to 180 as the price tag. So keep this on your short list. But like I said, I've already taken my position this week, and you will see it on the watch list coming up. Now, ADA, I don't have it pictured, but Grayscale Digital Cap Fund, they added ADA, and it's the third heaviest weighted cryptocurrency in that fund. So just know that, yeah, ADA is coming back, and it's not taking no names. But overall, cryptocurrency did pretty well, pretty okay this week. Still, Cardano is not pictured here, but I think that probably is going to change hopefully soon, so we can see it here. But Bitcoin, is going pretty good. You got Ethereum. It's on a little uptick from this downward for the last 40, 60, 30, 60 days. It's been down, but Ethereum, Bitcoin, Cardano, buy one of them at least. I think there was some on VeChain. I think China, it just had a news feed. I really had time to look at it because I've been at work all day. But there was some talk about something going on in China that they have recognized that VeChain is doing some good things. So just stay tuned to that and try to keep that. I went ahead and bought some shares. It's only like 8 cents a share. So if you say that Cardano is too much at $1.30, take a look at that one. Okay. So let's get right to it. So I want to talk about the financial sector really quick. The reason why I want to talk about financial sector because this could be picking up and leading to a good bag. So let's look. So what I want to do first is I want to turn it on. I want to see earnings dates first. So now you see the earnings date, and this thing, it has a hair trigger. So let me let it calm down before I go back into it. All right. So now you see your earnings date. So this pinkish color here is before the earnings. So most of these banks, they report July 13th, July 14th, right? Then you have Morgan Stanley reporting July 15th, a few other PNC reporting 14th, 15th. So July, the first 2.5 weeks of July is going to be nice reporting for the banks if they do some right stuff. So what we want to do is look at those different positions, strategies for option calls. So you can have Mary put, you can have strangle, straddle. So let's take a look at a few of them and see how they would look. So now that we know who's reporting, let's see their performance. So the first one up I want to do is look at JP Morgan Chase, because you know how I feel about JP Morgan Chase. JP Morgan Chase is if you could have got in June 18th, if you wasn't, that it was at 148 and it's already up to 156. So give me 1 second. All right, so let's see. So now with JP Morgan Chase, if you can get in, I say try to get in. If you can get in first thing Tuesday morning at 156, 157, that will be a steal. Remember, you want to get in before July 14th, July 15th when they report, and they report on the 13th. So let's look at another one in this sector. Actually going with Bank of America. So I bought the Bank of America. Reason being is I like the pattern. It's on a channel up pattern, sitting at pivot support of $41. So when I saw that pivot support for $41, I said at this moment in time, Bank of America is probably the best one chart wise for me to buy. I want to say Wells Fargo looked okay too, as well as Morgan Stanley. But I said $41 ain't bad. Let me go ahead and move and take my position now. And then if it dips before the earnings report, I will buy some more, and then we'll see what all the banks do in about 2 weeks. So Bank of America is the one that I selected. Okay, the next one that was on the list, let's do Wells Fargo. Wells Fargo, it's not as good. It's still on the same pattern as Bank of America, but it's a little it's a little above the pivot support. But it still is, to me, it's still in a good position if you want to go with Wells Fargo. But with me, I strictly did the one that gave me the best chance to make some money in a week. I remember when a week or two. So when I buy these, I'm only buying them right up to their earnings report, and then I'm gonna have shares. I'm gonna have a put and a call. I'm gonna lose money on one of the puts or the call if it does something, but then I'll capitalize on my shares if it goes up. So that's the strategy, and this is another good one that you can watch and see when you can get in. We talked about Morgan Stanley already. Let me do this. Let me see. We talked about Morgan Stanley. Let me pull up Morgan Stanley. We're talking about Morgan Stanley. Now, Morgan Stanley has already jumped up a little bit, but still, if the price target for this is going to be roughly $105, $110, Morgan Stanley is still a good buy, and it increases dividend. I want to say its dividend now is close to a dollar, close to a dollar.
Indians up there.
And just remind people as you're coming in, let me change my settings real quick. Let's see this. I thought I had it set where as people come in, it mutes, but I guess I didn't. Let me change that real quick. Mute all upon entry. There we go. All right. Let's get back to it. So now, Morgan Stanley, still, if you want to get in now, if you would have got in back in when we first came across Morgan Stanley, when it was at is pivot support, he would have already been up, a few dollars. But still, strong buy. All the banks pretty much this week lifted their dividend payment. So still, if you want to get in, even if it doesn't hit its mark, it's still paying your dividend, and it's $168 billion market cap company with projections of increase year after year. So I still a good buy on this one. So my top picks for the financial sector is as follows. All right, and I would definitely have this on the watch the watch list, the full watch list, not the quick list. But y'all know I love J.P. Morgan Chase. I love Morgan Stanley now. Bank of America I just bought to do a 2-week swing trade, and then Wells Fargo as well. But either way, I want y'all to go ahead and add another financial, even if you already holding JP Morgan Chase, because we're not gonna swing trade JP Morgan. We're still gonna buy those shares, but these other ones you can. If you don't own a JP Morgan, you can actually swing trade any of those. Now, the credit card services, Visa, MasterCard, PayPal, any of these would be fine, but I always rock with FOUR. And that's the one I select because to me it will give me some of the same movement as the O's, but it's not a Square, it's not a PayPal, but they do some of the same services. It's taking payments pretty much, but all of them are pretty much trading. Good entry point, not necessarily good entry point, but it's right in the middle. It should continue to climb as time moves on, but you have to be mindful of these PayPals and Square, because once the big banks get a win of what they're doing, they can easily offer their own similar pay structure to these guys. So right now they're ahead of the game, but then you got Apple Pay and all that that can get in there. But just get one or see how they move. And then try to swing it, or if you want to invest in it, just try to get a good entry point and add over time. But if you're going to do one, I would say just stick with Visa. Visa is coming up to the end of a wedge up pattern, so I look for it to move in 27. So it already had this earnings report, but as you see, it's at the end of a wedge pattern, sitting at 238. A little pricey. I don't really like Visa. I will swing trade Visa. But it doesn't pay a good dividend for me to hold it at 238 clip. but you see how it's moving. It hit the pivot support, it goes, pivot support, it jumps, it runs. Then it actually, actually hover over the pivot support line here, but it's at 238. Keep it on a short window because you see here, it could be gaining momentum to get you, on the other side of up 250. Well, some analysts got it at, 260, 285. But I see in the short term, it can have a good run over the summer. It can get to 250. So let's keep that in mind, okay? So you want to be in a financial over the next 3 weeks if you can. I think they're going to do something special as people start moving again. You still got to look at what gas is going to be doing and how gas prices and how people are going to be moving if they can get that OPEC deal. If they can get that sorted out. I don't think they had any movement today, but just keep that in mind. Also want to talk about IBM. IBM is on a great dip. It's probably going to continue to go down. IBM will be on the watch list this week. You see how it's approaching 36 RSI. So if it gets to a buy point, it pays like $1.63 dividend. So long as they don't touch that dividend, if it drops this time, I will go ahead and take a very strong position in IBM. So let's see when the markets open back up next Tuesday, see how it works. But anytime you see this, I think some leadership stepped down. That's why it dipped, believe, or something happened. Oh yeah, the president, James Whitehurst, stepped down after 14 months in post. So whoever this was, he wasn't there long. So he must know something that we don't, or something is boiling over. But let's see what happens. And then anytime you had a shakeup at the top, the price, it fell a little bit, but let's see who's going to pick up the torch and run with it. Still, it's still, as long as they keep that $1.63 dividend, it's a grab. And then if you get stuck with it on a flip, on a swing trade, I mean, it still holds its weight across time. It has pulled back a little bit and then it leveled out, but you'll have time to make some money off of it and get in and get out as you see fit. All right, next up, I want to talk about Microsoft. Microsoft is doing this thing today. It's been doing this thing for the last month almost. So you see, and it's still going to continue to climb. See how it pulls back at that 280. Once it breaks through 280, it's no stopping the 300. You want to get in. I tell people, I had a client that got into this one. I think he was like right under $200. And you see back in COVID, it was sitting at 196. I think that's when he started with me back in September. And you see, he's made almost $100 a share. So I think it will still do well in the short, long future. So just continue to buy. Apple has picked up too. And these are just no-brainers at this point. But you got to be in one or the other. If you don't like the price tag on Microsoft, stick with Apple. Apple is probably going to eventually do some of the things that Microsoft is doing with the cloud and stuff. So I want to say they already started some talking about the cloud and Apple. Yeah, I think they're using Google or something like that. But find it, read up on it, and just get smart on it and move out from there. Chevron, I think you all should grab some Chevron. I was going to buy more of it if I could. It would have dropped below 105, but I don't think it's going to get to 105. I think even if the deal doesn't, do well, I think it still will get to, above 110 at some point during the summer. It may pick its head over 110, but if you can get in now, do it. How do you get in? You just move some money off your base. If you're owning Microsoft, Pepsi, JP Morgan, Pfizer, you can pull some money from there, stick it in there, flip it and put it back. But I would say I won't touch Microsoft right now because it's running well. And then let's see how it plays the 280 mark on that Microsoft. But Chevron is still solid. Everybody who bought Excel, how can I spell the way? Excel, there we go. So everybody bought Exela Technologies, congrats, because you made some pretty good coin. This was, I think we came up on this about two and a half weeks ago. We told people to buy it. Actually, it was right here, because when a lot of us bought it, We bought it here. We thought it was going to run, then it dropped. So we spent almost a week and a half buying more of it. And then it started to go back up, and then it jumped up. We sold out. And then now it's probably prepping to do the same thing again. So you see the pattern in this. So you see how it jumps, it peaks, then it goes down. You see it here, right? So it did a nice gap up like it did here. Then it's going to settle down. So once this thing settles, it may settle down 145 to 135 range, pick up some and do the exact same thing you did before. And that's how you do it, okay? So congratulations on if you bought Excel Technology. Now the company, there's nothing wrong with this company. It has a lot of good things that happened in the last 30 days for this one. So continue still buy it. I mean, and just invest in it at this point. Because if you invest in something at $1 at this point, you do it for 2 years and it end up being $10, $12, that's a nice healthy bag that you can cash out, 2 years from now, and you bought it for pretty much nothing. So put Exela on your maybe 2-year or short-term investment and see what it can do, because it has potential to at least get to, I say, $5 to $7 with time. So to me, that's not a bad deal. Okay. There was a few ones that I wanted to hit because someone asked me about airlines. So I carry a portfolio already on airlines, and I just want to show y'all how the airlines have been tracking. So this portfolio I made up last June, July this time. So we were right here when I made it because we couldn't go nowhere. And I said, well, let me buy some airlines and see how they will fare. So back then, this is what they cost, and pretty much all of them almost doubled in value so far since that year. So I would say, it would be good to continue to invest in those. Okay. So a few of them that I like personally is Alaska Air, of course, Delta Airlines, American Airlines. To me, that seemed like the one that everybody likes, but there are some good ones. All right. So we're going to take a minute and look at a few of their charts, and then I'm going to show you what you should be buying if you want to get in it, but you don't know which one you want to get into. So what I'm gonna do, I'm gonna rack them and stack them by price, and then we're just gonna look at some of the charts, and I'm just gonna talk about a few of them that I see that potentially could do well. Even JetBlue has doubled in value almost. But I wanted to show y'all, and I put some cruise lines in there, and we'll talk about cruise lines in just a second, because I would say I went ahead and started to pick up Carnival Cruise Line on mine. Right. So I'm looking for Alaskan Airlines. Where are you? All right, Alaskan Airlines. The reason why I looked at Alaskan Airlines, right? Because it had its sharp increase in February when everybody was getting vaccinated and all that good stuff. You saw now it got on the wedge pattern. Then it did a slight dip at the end of June, right? But now we know it's the summertime. People should start flying again. Things should start opening up. I think it could have potential to get back to 65 and run back up to, $72, $73. If it does, that's a $13 swing, and and it's a fairly decent airline even before the COVID happened. So before the COVID happened, it's already reached back its COVID. It's already at its COVID drop down. I think it could get back to $80 here when everybody spikes back up, so you can make a fairly good amount of money if you jump on Alaska Airlines. So I like Alaska Airlines. If you don't want to buy straight shares, try to get an option on it that it is going to move in the direction that you like. But mostly all the airlines, if you see them, they're all are in a downward trend for the most part. This is Delta, downward trend, right? United, downward trend, all right? But eventually, and it could be the month of July, you may see some numbers perk up over this holiday weekend. But is it time for you to take a position in Delta Airlines? I mean, in any airline position straight? I say buy this one. And the one that I'm saying is Jets. It's a U.S. Global Jets ETF. It's an ETF, and the ETF is an exchange traded fund, and it carries all the airlines that I just showed you and more. And you see, it's doing the same thing that the airlines that I show you were doing. Downward trend, right? Downward trend, and a little uptick. And it does pay a little dividend. It probably counts to the dividend because of COVID, but it didn't pay a lot when it was. So, but if you want to be in the airline business, I bought some of this today with my Carnival Cruise Line, but this is the one that I will go ahead and grab. Now, is it going to make you a bunch of money? No, not by any means. But is it a safe bet to get you at least $10, $12 a share? Of course it is, because that's where it was running before COVID. Right. So now the reason why I like this one as opposed to an individual one, because one of them can get hot and you can get a little gains, right? You don't need all of them to get hot, just the heavy weighted ones, the Deltas, United, the American Airlines, those get hot. You can see a nice increase. But I just want to show you all that. It's fairly new, been out about in 2016, but consistently, once the airlines get back rolling, this is pretty much stayed consistent since it was created. So I think about that one. There has been some momentum with it. If you look at the MACD down there, the RSI price is still kind of stagnant right there at 50. But once everything gets rolling, easy, less stress. You in all the airlines, and that's JETS, Jets. I just had to say that. I'm sorry. But JETS, put it down and take your position on JETS first thing Tuesday. Now, Carnival Cruise Line, I mentioned that when I was talking about Jets. I actually went ahead and took my position, and as a FSW, we actually bought some as a company as well. I wanted to try to get it close to 24, but this is strictly a swing trade. And if you see how it's been doing, it's been running kind of these V-shaped type recoveries, kind of sort of, but it may be a sharp recovery back to 32, and you just made $5 to $6 a share. And even if it continued to dip a little bit, eventually everybody's gonna be back selling again. Then you can cash out then. But I bought this one, and I'll probably continue to buy it for the rest of this year in anticipation that people will be back next summer cruising, or in some form or fashion over the next 2 years back to cruising. Okay, so 25, I don't think it's gonna get back to where it was COVID, down to $8 or $9, and I don't think it's gonna do that. I think it may at worst get to $20, if that. But this is, to me, is a good time to go ahead and jump in this cruise line if you really want to jump in the cruise line. Now, another cruise line that's hot, but I didn't look at, Royal Caribbean. The chart does look better on Royal Caribbean on the daily. This is the ascending triangle, so you're buying it right now at pip support. 94 to 97 is your target here. But the beauty of this is it's in a pattern that you can chart better than Carnival Cruise Line. I just went with Carnival because it was a little cheaper within my price range that I wanted to buy. But you look at Royal Caribbean Cruise Line, every time it hit this pivot support line, it did what? It increased. So it was 53, 65, 66, 78, 84, now it's 86. So slowly but surely over time, this is getting back to where it needs to be. Now, Royal Caribbean is the only cruise line I've ever been on. So it's nice. So $86. Let's see if you want to get in one. This is another good one that you can go ahead and capitalize on. And the chart looks really good on this one, on the ascending triangle. So just keep that in mind. I wanted to share those with y'all because a lot of people have been asking me about cruise line and airlines, and I said when the time is right, when I buy into them, I would do a call and let y'all know on a Friday night call. So I bought Jets, Jets. I bought that for my ETF for all the airlines, JETS. And then I bought Carnival Cruise Line, and I may pick up some RCL, but I'm gonna see what after my bank stocks report and see if I can do a nice flip on those. Okay. What else did I want to check out? I think that was it for the ones that I wanted to actually show y'all tonight. I'm going to give y'all a quick sneak peek of what to expect at the start of next week. So as I continue to build the weekly watch list for you guys. So I'm just going to just show y'all what you should be looking at. Job, JOB, it's going to be similar to Staff more than likely. They're just alike companies. Staff did a reverse split 1-6, and it went to $5 a share. For every 6 shares you got 1 share of the new at the new price. But JLB, it may be something there, little risk at 60 cents. So just think about that. BXRX, if for my penny stock lovers, look at the chart. It met my screening parameters, so that's why it's there. Of course, you have Staff. I was waiting to see if you got sold your Staff. I won't come in at $4.99. I'll wait to see if it pulls back a little bit, and then you'll get in it if you like it. But meantime, go ahead and buy JOB. Staff still has some room to run though, just FYI. But if you like me on the penny stock, I would rather buy something that's under a penny instead of buying a penny stock that gapped up to $5 on the reverse split. Now I put this one up here because when I was doing my screen, I was like, hey, this NVO is looking good on the chart, and it's been running above 70 for almost 3.5 months, and it's at $9.32. Even though it's over, it's at 85 RSI. Energy, oil, and gas, and it's all the numbers looking good over the last 200 days. So I'm not telling you to buy this right now, but it could have a nice summer. That's all I'm gonna say. It could have a nice summer. I have not bought this. I just wanted y'all to show y'all that this is something that's moving in the right direction and doesn't look like it's gonna come down. Now it may pull back down to the $8, but it may continue to do this little run all the way up to, back up to the $12 mark. So just keep that on your short leash. If it pulled back a little bit, jump in. But I know some of you guys like to, put money in and hurry up and get a bag. But this is sitting right at 69. So if it peaks ahead over that 70 RSI with the momentum, it may get to back to $12 before the end of July. So let's keep that in mind, okay? PLTR. Reason why PLTR fell back a little bit. The little art lady, she took out a bunch of money out of position, but she still owns the position in one of her funds. So I'm like, they say that to try to bring the stock down. I'm like, oh, she sold a bunch of shares, but she really didn't, because the bulk of her shares was sitting in a fund. So I mean, it is what it is. But once it dropped a little bit, I just picked up some more. But this is something that is going to take time. I believe it's going to double. I think it's going to be about close to 35, 40 bucks when it's all said and done. I just bought this along with my Microsoft, and I'll carry this probably at least for 6 months. I wanted to see what after the infrastructure bill down in the Capitol Hill, after that get approved and money start going out, I want to see if this is going to pick up a contract like it did back in the day. So more to follow on that. Co-founder that found this one, co-founder at PayPal as well, and we see how PayPal is running. So PLTR is still a solid buy. Now the newcomer on the block really impressed me. The tech on this looks really good. It's a Santander Consumer USA Holdings. Okay, so what this company is, pretty much it's like retail contracts on vehicles, inventory, construction, real estate. So it's pretty much finances those type of companies. When I saw this one, I said, what is the deal with this one? It gapped up, right? It gapped up, and it's still not even over 70 RSI. The momentum, the MACD just crossed the 9 line. So to me, that tells me, hey, this may be a very strong buy, even though I wish I would have got in late, but it hit my radar today off this jump. But still strong buy, $40, not too bad. It pays a dividend, not much. I think that's about $19.20 it's gonna pay per share per quarter. But I think this will go well for you guys. And it's optionable, so take a look at it. But the tech on it looks good. The volume is there. I'm pretty sure people will start screening like I did, and it's going to hit your radar, and this may get to 50, $60 in no time if it continues on this path. So I just want to show y'all that. I will buy some next week. We talked about CTXX. If you haven't bought it, I think you should get some. It's looking like it's going to start trending in the right direction. As soon as this thing gets over 125, I probably will sell it. I came in about 116. Now, hopefully it gaps up like this, but I think it's going to be a sharp climb like this over maybe 30, 45 day span. So I do have a call option on this for the pivot resistant mark at 145. So either way, it's gonna be a nice bag whenever it hits. And then once I get to a certain amount on straight shares, I would add a put just to as an insurance policy to cover my anything I could potentially lose if it drops. Talked about IBM already and started the show. Bowen still looks good. If you're going to buy Bowen, this would probably be a good time, 236. See if it continue to drop a little bit, because once everything starts to turn back on, Bowen should get back to where, over 250 consistently. And we're not going to be talking about Bowen dropping it. It should stay fairly the same. So just keep that in mind. So you see, before COVID, Bowen was, over 295, 297, flirting with 300. So just know that it's going to get back right. And you have a long way to go before you can get back to its pre-COVID conditions, right? So before pre-COVID, it was sitting at 350. So Bowen may be a good buy here at the 236 clip. And remember, you don't have to use, you just can move money from one base to another position for a short-term investment, because as long as it has the potential to make you money, that's the best thing to do. Last thing on the watch list so far, we talked about Microsoft early, but I really want to come home back on Microsoft because it's running. Now, if Microsoft should happen to pull back, and normally once it gets this hot, it goes back down to pivot support. When it goes back down to pivot support, it should probably drop back down to 260, if anything. If you own Microsoft, don't worry about it. Just can buy the dip. Buy the dip. If I wasn't so heavy in Cardano, I would have put a bunch of money on this one. And probably maybe about a week or two ago, because I really believe it's going to stay over $300 for a while once it reached there. So if I told you can make $30 a share on anything else, and then I talk to Microsoft, this is a no-brainer. So do whatever you can. You should be buying, and I quote, you should be buying Microsoft, you should be buying Cardano. And to me, if you're just buying those two, I think you're going to bode well in about 4 to 5 months. We did put out some information about Cardano. If y'all want me to, I can blast out an email, but Dr. Cofield sent it to me that just an alert that yes, Grayscale digital cap fund now, Cardano is in there. So it's Bitcoin, Ethereum, Cardano, the top 3 holdings in that fund. So it's moving. People see the value in it, and it's still under $1.40. Well, the last time I checked, it was like 134. So still continue to buy Cardano, folks. Okay, buy Cardano, stay Cardano, vault Cardano, do whatever you can. It's at 140 now. Do whatever you can to continue to buy over the entire summer. So every time you do go out, have a drink, go out to eat, go visit family, you should make it, put it in your budget. Anytime I move on the weekends, and I'm gonna buy Cardano. Okay, so that's it for tonight. I said, sorry I started a little bit earlier, but like I said, you can always go back to our YouTube channel in the next few days when we actually hang it and post it. I also going to be posting within the next 24, 48 hours. I did a little small, probably about 15, 20 minutes on pivot support, pivot resistance, how you should be looking at and finding those as you make your trade. So check that out on YouTube channel as well. So I'll hang tight, but I'm about to stop the video right now. I hope I did it right. Stop